They're like a whole sector of app store markets or games. Like I agree, they don't feel like games; they feel like chores. And I think Snoop Dogg had this like weed farming game a while back ago where it was the same concept. You were farming weed, and it was just a tap to earn or tap to click play game. And I don't know, maybe there's something there, but it's really hard for me to say that like, yeah, that's what's going to onboard the masses. And one of these apps on Telegram tweeted out their active users stats, their active addresses stats, and they're like 1.25% of the world is playing our game. And I was like, all right, well, you were just showing off how useless that metric is. 1.2% of the world is not playing your Telegram app.
Nothing said on ZeroX Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of ZeroX Research. Today I'm joined by Brick, Effort Capital, and Daniel Smith from the Blockworks Research Team to talk about everything that's happening in the markets. Before we get started, I just kind of want to ask you guys about what you're looking at in the markets, because as far as I've seen, it's kind of in a lull. Not a lot of exciting stuff happening on chain, but it's always good to crowdsource.
Yeah, that's a good flag. Agreed. And whenever we're getting to these lulls, I tend to find myself going back to majors and just looking at whose activity is somewhat making an effort to justify their valuations. I'm definitely a person that wants fundamental valuation to be somewhat real. But in the context of today's markets, that's just not the case. So largely for me, that's been looking at Ethereum and Solana, which is the boring answer. But like, I really want to start tearing these things apart and figuring out like what's driving value. And if we look at the amount of like fee generation on each chain over the last few months, Solana's been crushing it on a relative basis. I was just talking to Kyle Samani on an episode of Lightspeed, and I kind of asked him this. I was like, look, if MEV value, like he believes, is what drives the fundamental value of an L1, and Solana and Ethereum are basically at parity on that metric, then why is there a $300 billion valuation gap between the two? And his answer was like, because there's a $300 billion opportunity. Which, like, that's obviously his position, and there's bag bias on his part there. He's a huge Solana investor, not saying that in a negative way by any means, but there's also like emotional bias inherently when we talk about these things. Like, I don't know, people tend to get religious over blockchains for one reason or another, and I think it's a lot of what this boils down to is Josh Bowen actually just gave a talk at Research Day that was, we're all building the same thing, and he's completely right. That everybody's building the same thing with slightly different terms because nobody's paying attention to what everyone else is building. And I think the point there is path dependency matters. What you build first in the path to building the exact same thing over the long term really, really matters. And I've just been kind of hammering in on Solana recently because they're choosing to optimize the execution layer first. And even if we all are all right and we end up at this exact same end state, in my mind, optimizing the execution layer first makes you a more attractive place to build interesting applications. And that's probably a better starting point. So it's kind of my long rant to say I've really just been looking back at L1s again.
I want to ask something about Solana execution layer and applications. I feel like there aren't. We'll get to Brick and Effort Capital in a second, but there really aren't. In my point of view, there just really aren't that many exciting applications on Solana as compared to like what Arbitrum had, let's say, like not this year, but last year. And like what
For sure. No, I agree. Like the DeFi's ecosystem is still pretty immature. One thing that surprises me every single day I'm alive at this point is nobody over there is trying to make any type of like, I'll say stable coin, but even like a yield capturing asset similar like an a la USD. It's mind blowing. It is truly mind blowing. Like there's a lot of activity over there. Camino got a couple billion in TVL. People are making decent yields. Like I am shocked no one is making an effort to kind of go try to pick that up and repackage it as another product. That's something that's really blown my mind on the DeFi side of things. And then, I definitely agree with you more broadly. I think we're starting to see that. And I think there's kind of two reasons for that. One is Solana's a young chain, relatively speaking. Ethereum's what, 9 years old. So, and the L2s building on EVM applications kind of get to inherit some of the uh, like trials and tribulations of other people have building on the EVM for a long period of time. That's kind of a part of that like EVM based moat that people talk about. And so that's why things can get quickly exported to L2s. But I would like push back a little bit there as well. I mean, I very closely follow what's happening on a lot of these L2s, and I don't think there's like a ton of stuff over there that I'm like, damn, this is keeping me coming back, and it doesn't exist on Solana. Like I would want you, yeah, like I would push and say like, what are those things?
Well, I mean, from my experience, the only stuff I can use in Solana is Jupyter. And on top of that, there's like really nothing to do. Or like, Jido is a really good like infrastructure product, but I can't really like leverage it every day, if you know what I mean.
Okay, so then here we go. What are you doing on Arbitrum? Is the answer? Here's the question that you can't feel like you can't do elsewhere.
Last week I was playing around with Sanko. You have these like small pockets where you find like stuff you can do. You know what I mean? It's just like a much broader kind of supply of uh, different things within different verticals you can do. Like I use Solana quite a lot, or I don't want to say quite a lot, but maybe once every 2 weeks or something like that. I don't trade that much. Like I don't want to say shit coins, but meme coins, and that's the only like purpose I use it for. So that's why I don't like. I'm not that much of a regular user on that side. It's just I go there, I try to find something to trade, and then like make a few trades here and there.
Well, totally agree with that. I like there's 90+% of the fee generation on Solana right now is meme coins, and so my big question there is how ephemeral is that, right? If you think about what's that activity going to look like in a bear market if it's all driven by meme coin trading, like surely that's the type of stuff that kind of dies out. If you look at Doge trading, it didn't die, didn't go to zero, but and then people are still trading it again today, and things like Pepe got built. I don't know the launch date of Pepe, but it was like this bear. Someone please jump in and correct me if I'm wrong, but I feel like it was early 23. So like I don't think meme coin trading's it does worry me to your point of like if we fast forward to the peak of next bear, what does activity look like? Right now, it's probably not going to look great. Where I'd push back is things like Drip are coming to Solana. Baco, I sent you that magic block thing, which is like some on-chain gaming thing. That actually looks really interesting. I don't fully understand the tech stack there. I just discovered it like literally 30 minutes ago. And then Deepin, like that's huge on Solana. That probably bigger than any other chain, right? You got things like Hive Mapper, Helium, things like Baxos. So I think that's just a different angle, and like that's less crypto native facing, right? Like I'm not going to go rent a GPU personally. I just have no need to go do that. And like I'm not mapping with Hive Mapper, so like it doesn't really impact me, but there are those things driving activity on chain as well. So I
Yeah,
think it's just like a different expansion bubble, and fully agree with you that the DeFi ecosystem is lacking, and I'm genuinely shocked by that. I can't believe that there's not a couple core primitives that have cropped up.
yeah, and maybe I formulated that in a bad way because, like, yeah, as you said, deepin is a big thing there. But then again, going kind of back to your value creation point, like if everything is coming from meme coins right now in a bear market, like if you only have deepin stuff going on, I just wonder how much the total economic value as one then has some or like named the new parameter, so to say, like where does that end up at? And yeah, maybe a good example of like if the chain doesn't kind of cater to your core needs, you're always gonna forget that, oh, you have like these types of apps that I'd never use, but they're like super useful. For example, yeah, I'm in love with Near. That's like a big position for me, just like a disclosure. But I think a lot of people even forget that the whole chain exists. But recently, like it has seen a lot of more activity coming from like real world use cases, and like you basically nowadays don't see anything or any talk about it going on the timeline. At one point, there was some hype about it because of the AI stuff and maybe some DA stuff, but now it's like kind of being forgotten about again. Although there is like meaningful activity on that chain.
Yeah, as far as I understand, Kaikai is actually quite big. The only issue with I think with Nier is that, like, that image that they posted that was like Jensen touching Ilya, and they were like the touch of AI or
The
something.
touch.
I think that like perfectly
The top.
encapsulates Near, because it's like they're constantly trying to like touch on whatever narrative that they have instead of like actually highlighting core use cases. Like Kai, people not knowing that Kai runs Near underneath it is incredible. Like both from the consumer side, because at the end of the day, that's what you really want. Like if you're not getting into crypto like us just because you're interested in crypto, but you're getting into it just because you want to use the app, you don't want to know that it's running on some form of like blockchain infrastructure. You want that abstracted away. So I feel like they should be pushing more into that, but I'm not like, honestly, I'm not really sure how they would even do that, because I feel like they have so many of these narratives that they keep trying to latch onto.
Yeah, I guess that's BD work you would do behind the scenes, right? Like you just contact some companies or like some potential clients, and I don't know if there is that much of a need to like make Near big on Twitter just because of that fact. But then also, I feel like their DA solution isn't really talked about. I guess it's been pushed back or like not really like gained adoption yet. I think the first L2 they used Near DA came or went online like maybe 2 or 3 weeks ago. So maybe that's a narrative that will pick up in
Is
the
that
next coming months.
is the RSS free?
Yeah.
Oh, I'm pretty sure you sent that to me, but I feel like that's just not big enough of an L2 to also like make waves about the DA though. But when I was looking into DA layers, it was like very clear. Obviously, this is also coming from like the team, but as far as they explained it to me, and as far as like I saw, Near does beat like most other DA layers in essentially everything. There's the chart, including cost,
Showing some
speed.
Blockworks research data here. Yeah, like that's pretty spot on. One thing I want to do is add Near to this chart. If anyone knows their way around a Near Block Explorer, shoot me a DM at SmyGuy on Twitter. It's a fucking war zone over there. But I mean, it is crazy to me to see the difference in costs here from going from call data to blobs for Ethereum was about a 99% price reduction. And then going from blobs to Celestia is like another 80-85% price reduction. At some point, that the next marginal 80+% price reduction probably doesn't matter that much. And you're looking for other benefits from the network effects of your DA layer. I don't know if that's at 14 cents for Celestia or if that's at 1 cent. Let's say if that's, if Near really is offering another, material price reduction there. It's hard to say. I personally haven't priced out. There's a couple, I think there's one L2 that's live and posting DA to Near. So we will have that price feed. So yeah, I mean, I'll keep you posted with this chart.
Based on like what Near released, it's 30 times cheaper than Celestia. But obviously, like I looked at what they were citing, and it's a transaction that they simulated on their end. So obviously, it might be like funky, but I mean, even if it's 15 times cheaper. But like you said, at that point, does it really matter? Like you've already gone from call data being exorbitantly priced to like you lowered that with blobs, lowered that more with Celestia. And then like how much lower do you need at that point? Does it really matter that much?
One more number to put on that, right? Like Orderly Network, which is like a order book network, something or other, is posting its data. It's a roll structure, and it's posting data to Celestia. Now, it's been live for a couple of months, and it's posted the most data of any chain by 3x to Celestia, and it's paid a total of $1,200 in fees. Like that is, and that's obviously divided amongst every transaction that it's processed. It's really gets hard to say, yeah, that needs to be another 30x cheaper. Like at that point, it just doesn't matter. There's too many leading zeros for the user to even know there's a difference.
All these DA solutions and infrastructure players in general are just fighting for the same dev pool. Costs are getting commoditized. That's not what it matters. That's not what matters, or where like the differentiator is. It all comes down to narrative on crypto Twitter, and it comes down to incentives too. So I think what you're actually seeing this morning, there's a conversation being had in the Celestia forums about actually leveraging some of Celestia's community pool, which is only about $7 million today. And I got to confirm, but I'm pretty sure the community pool just comes from like normal Cosmos chains, percentage of inflation. It's like Cosmos Hub, 10% of inflation goes directly to the community. The rest of the 90% goes to stakers and validators. But there's about $7 million in Celestia's community pool, and there's a conversation being had about creating like an incentive program to. There you go. Thank you for pulling it up. Yeah, it's a very early conversation. Only 3 comments I think are on the forums right now about what to do with this community pool. Should it actually be used as like an incentive program to get more rollups in the ecosystem, leveraging Celestia for DA, or incentivizing economic activity on these rollups to, I guess, bolster this narrative as T is modular money. This is one thing that like Ethereum can't do because Ethereum does not have on-chain governance, does not have a community pool. And I think this is something that other DA providers or other infrastructure players in general like have to lean into. Follow the money, follow the incentives. This is what Arbitrum has done really well, whether or not you agree with their treasury spend or not. I don't personally agree with, I think, the magnitude of the treasury spend, but I think directionally it is correct. Like right now, tech is going to get commoditized. Infrastructure is going to get commoditized. It all comes down to like incentivizing developers on your platform. And I think that's where Celestia, even Near, right? Like Near, if I remember correctly, Near during their token launch event last cycle, a percentage of Near supply was actually supposed to be allocated towards the community. I think because there was no framework, I was actually reading about this over the weekend because I've been getting more interested in Near in general. I'm not a bag holder like Brick yet, but maybe I will be soon. A sizable amount, I want to say like 15 million Near, don't quote me on that, was supposed to be allocated towards the community, and they never did it, or they did it but then pulled back the funding because there was no framework for how you actually allocate this amount of capital. There's now actually a conversation being had to reinstitute this community pool or this DAO treasury. And I think interestingly enough, you just saw an announcement by Gauntlet about a week and a half ago. They're partnering with Near Foundation to, I think, like bolster, create a framework for how their governance structure should be set up moving forward. So this is where protocols need to lean into things that like Ethereum can't do. Ethereum has all the network effects. It has all the developer activity. I think that's why you're not seeing net new applications in Solana and other ecosystems, because like 95% of the Web3 developer space is like just in one area, and that is like in the EVM, in the Ethereum ecosystem. So yeah, so I think that's really like the edge that these other infrastructure players have.
Speaking of like ephemeral activity, though, I guess a better way to frame this, which probably says something about this industry, is all right, what base layer has the stickiest level of activity, right? Because if you think about like Ethereum mainnet, what's driving activity on L2s, right? That's largely the same, coin swapping activity that we see everywhere. And so if that dries up industry wide, my question is like, where do you guys think, what base layer do you think retains the most level of activity and ultimately like fee generation?
If you remove coin swapping?
Yeah, if you say next bear market, the real question is in the peak of next bear, where is the most activity remaining? That's the best way to word this question.
If you removed speculative activity from every single chain, you might actually have to say like Near might be the number one chain with non-speculative activity. I think owning a majority of its economic activity on chain. So Kaching has, and I know you hate this metric, Dan, but has 924,000 daily active addresses.
Means nothing.
Means nothing. But generally speaking, like if you look at the applications that are on their platform that are on Near, that are driving a lot of the economic activity, it is not as financialized speculative activity that's happening on Arbitrum, on Solana, obviously. So you can make a strong case potentially that Near might actually have the most sustainable, and I'll put that in quotes.
If we remove coin swapping, I feel like it could also be ETH mainnet, just because.
Why?
Well, because most of like actual capital activity happens on ETH mainnet, like not swapping coins but borrowing and lending on stuff, as opposed to, let's say, like other chains. Now obviously I don't know if it would be like the same amount of transactions, but I'd say like the most capital being moved or like used in transactions, it would definitely still be on ETH, because nobody's lending and borrowing like size on other chains.
Yep. Shout out MakerDAO for that. I know we've hold on. I want to take a step back because we've thrown Kaching and Kai around. Like, what are these apps actually doing?
So Kai is just for like basically think of kind of mixture of Uber, online shopping, online experiences, all of that thrown into like one app, and then you can basically you can buy the stable coin, which you can't like use anywhere else than on the platform. And I don't even think you can like go back kind of to US dollars from the stable coin. But like by buying the stable coin, you're basically like getting some like discounts within the app to buy different things. And that's like driving the activity.
So, like an active address there, it means a little more, right? That's presumably somebody who's logged into an account and like purchases something on the app, right? So that starts to mean a little bit more.
Yeah, I'd say so, but I'm not sure if there's like I don't know what the right term would be on that chain, but like smart accounts or some like account abstraction, like contracts that also send like transactions, which might kind of obfuscate the numbers, if that makes sense.
I
Going
want
back
to.
to really quick, sorry, Picacho.
No.
Just like I was doing some, again, I already said this, I was doing some due diligence on Near, and going back to what you were saying, Picacho, like there, or maybe it was Brick, about all these narratives that Near has, AI being one of them, DA being one of them, but then you kind of see, I think, discussion on crypto Twitter, which is like I don't know, the town hall for the crypto space. Seeing conversation, I think, dissipate around Near. But what I literally just found out doing my own DD was that phase 2 of Nightshade, I think, is launching. It was supposed to launch in May. I don't believe it did. Maybe it's happening this month, but that expands Near's sharding capabilities from 4 shards to 6 shards, which is going to expand its network capacity by like an additional 50%. I think generally speaking, like Near is in a pretty enviable position from an Ethereum lens. They figured out sharding when Ethereum decided to like skip sharding, go this like roll-up centric environment, which is predominantly hosted by centralized sequencers. Near has 30x cheaper DA costs. They actually have non-speculative financial activity happening on their chain. They have native like cross shard composability, whereas like rollups don't have a native interop or composable solution. And this is someone that doesn't own any Near, but like the more DD I'm doing, the more I'm like, Near is actually good tech, and they're actually starting to hit some sort of escape velocity, relative speaking, in terms of on-chain activity. So I'm definitely getting more interested in it. And obviously, you're not even talking about any like the AI stuff that Ilya, and I think the Near team is kind of like trying to create an incubation program specifically for AI or ML related tasks for Near. So a lot of interesting things going on, and I don't think they're getting nearly as discussed as they probably should be.
I wanna kind of go back to something that you mentioned, effort, infrastructure, and how we have so much of it. And I think this has been like a prevalent theme across the past few months. And it's just that we don't have apps. We have
Past 7 years, 8 years, 10 years, however long crypto's been around.
No, we've had apps before. I mean, we had apps last cycle. People at least trying to build silly stuff on chain, and I feel like this time around it's not there. And I'm wondering if it's just because of like where we. Basically, what I want to understand is why you guys think this is and how you think it moves forward. I feel like the like lukewarm take here is that incentives are messed up and that it's just more attractive to fund infrastructure, and it's more like people are incentivized to build infrastructure. But I kind of want to understand like how you guys see this developing, like because as you said, infrastructure is getting commoditized and we're building the same thing over and over again.
I think that's a cop-out answer, to be completely honest. Not attacking you by any means. People say this all the time, right? Like, oh, you build a piece of infrastructure, you'll get funded easier. Maybe it's true, but I really do think it's a cop-out answer for, again, going back to that point I made earlier, where path dependency matters. The industry of like smart contract platforms kind of like revolves around Ethereum for a logical reason. And Ethereum chose to maximize decentralization. That was their goal. They're going to prioritize the solo staker. You're going to be able to run a node at home, a validating node for, less a monthly electricity cost. It's like less than turning your fridge on. And because of that, there's like cascading design decisions that have rolled out of that, where scaling has become the constant battle that they're trying to solve against, rather than, if you flip that on its head, you scale first, decentralize later. And because of this, I think we ended up in this like infrastructure circle jerk where you have to constantly keep trying to build this next piece of infrastructure that pushes you marginally closer to being able to get the goal of a scalable blockchain, right? And what does that look like in practice and using examples? Well, you end up with L2s, and then you realize, okay, well, this is great, but now we have this centralized sequencer. So how do we fix that? And it's like, oh, well, guess what? We get another consensus mechanism, some more infrastructure with a decentralized sequencers where everybody can opt in, and we have this market for sequencing blocks. Or we do like this base sequencer thing and just reuse the Ethereum validator set to sequence blocks for base rollups. That sounds fantastic. Okay, awesome. But it turns out you're constrained to the limitations of the base layer when you do this. What does that mean more concretely? Is 12-second block times. And so to get around this, you need pre-confirmations. Well, what do you need for pre-confirmations? More infrastructure. And so that's my point, is we get in this like death loop of needing more infrastructure and ending up with like these things that are like, this one little small thing centralized, and maybe that's okay. And like, what does that look like on mainnet? Well, we have 3 builders that build 90% of the blocks. And if one of them changes their mind and starts censoring, being Titan, we go from like a 10% censorship rate to a 90% censorship rate. And then if we go to this pre-conf world, gateways and sequencers and proposers, they all end up and L1 builders, they all end up being the exact same box. And like, maybe that's a bad thing, maybe it's a good thing, I don't know. But it does feel like that just gets so swept under the rug in Ethereum, where in other ecosystems like Aptos and Sui, we like basically have whitelisted validator sets, or very high standards to get into the validator set, much smaller validator sets. And that's like their trade-off, is like, hey, well, we're going to figure out how to decentralize this thing later, but we're going to go fast as hell today. And so it's just an interesting way to think about the need for infrastructure stemming from Ethereum's core design decision to prioritize the solo staker.
I think there's a interop protocol called Union, and this is not an attack on Union at all. I actually think Carell and like the team over there do good work, but he had a Union protocol had a tweet like a few weeks ago. I was like, rephrase the modular thesis in less than 3 words, and I was like, value extractive middlemen, because that is all it is, right? Because Ethereum has pretty much this entire infrastructure VC landscape is strictly just to put like patches to Dan's point. Some of the I guess technical challenges I think Ethereum has as a base layer. So we're trying to come up with all these like other side infrastructure solutions, instead of just as an industry just deciding that like we need to move on and we need to continue building on top of like the best infrastructure, which you can make a case is a Solana or one of the other like all L1s today. But crypto is still generally in this like religious phase that they cling on to like a religion or a cult, which is like the overall Ethereum mindset. And that's mostly where obviously a lot of like the capital is being allocated to still today.
I don't know. My take here is that the industry is still relatively young compared to like, for example, what happened with, I don't know, like the normal computers or like operating systems connected to those. Like if you, it took a super long time to even realize that a GPU might make sense to like add to a computer, and like without a GPU nowadays we wouldn't be able to do kind of anything we're doing with computers right now. Same was with like operating systems. You had to be able to code to like even be able to, interact with a normal computer. And from there, it took probably again like 20 or 30 years to get to an operating system that like, I don't know, you or my dad can use. So I just feel like it's a bit unfair to yet, trash on just the infrastructure stuff, because like, to be honest, if you want like real mass adoption, no blockchain is yet ready for that. And I think it's fine to kind of continue developing infra, or like just focusing on infra. I don't really have a problem with the But I do get where you guys are coming from, because it seems that a lot of this stuff, at least on the surface, it just seems kind of like a money grab, or like easy to get funding type of grab. But it's also like not all VCs are stupid, or like I'd say most VCs aren't stupid. So like if you're able to raise funding, it's likely that VCs have like seen something in your project or in the infrastructure thing you're kind of developing.
They have a mandate to deploy this capital, right? Like they're not going to, a Paradigm or someone else is not going to be able to deploy $850 million into a bunch of different decentralized applications. And I think one of the reasons why is because one, the TAM is not large enough to like justify 1 billion plus valuations out of the gate for like what you're seeing for a lot of these infra projects. I think another reason why is because if you look at like Web2 today, what is the last mainstream application, mobile app in particular, to really take off? TikTok is probably like the most recent one, obviously, and that was created 7 years ago. I think the reality is like, so just speaking socially, I think social applications specifically, we've kind of hit a dead end in terms of, in my opinion, creativity on like what the next mainstream application is. So I think that's like true for the Web2 side. And then when you add Web3 or crypto, it's like, all right, well, how can crypto better improve some like the Web2 social or application experiences? So I think it's a Web2 problem in terms of like what is the next big app that consumers want. But I think just adding crypto to it is just like another barrier or another barrier of entry for getting app developers to like build net new things. I just don't think like I don't think society really knows like what that next thing is. It probably has something to do with VR or AR, but maybe that tech is too early to create, I guess, that next big thing.
Yeah, but I mean, it also requires just like one big breakthrough, and then you start getting more and more devs in. I think, especially on the like on-chain AI stuff, you've already started seeing this where people have seen the potential. Suddenly, token prices go up, and then it's much easier to kind of attract developers, even from like big AI, like traditional AI companies to on-chain like projects working within AI.
I think I gotta explain myself a little bit over here as well. Like, I like the where you guys took the question, but I was more so not like against espresso and stuff, but more so like the 15th L2 that is like doing native yield. But I like what you guys brought it to a lot more than me trying to shit on infrastructure for the 50th time over the past month.
Well, the espressos of the world are like, they're solving a problem. This problem
Yeah.
exists, and someone needs to build the thing to fix it. Like I'm not saying it's a bad thing, and it's just like it's an observation of like why that problem exists. Right? Again, going back to the thesis I laid out. But you're totally right. Like, do we need yet another L2? No. Do we need another Ethereum based L2? No. Like, we don't. Like, we've got plenty of them. We have multiple teams building out. Like the issue is they're all general purpose. I think like app specific rollups make a ton of sense. You get benefits that you don't get when you're building on a general purpose layer. Like that makes sense. I don't think that's like a hard leap. But when we see like Base, Blast, Optimism, Arbitrum, ZK Sync, ZK EVM from Polygon, the Polygon POS chain will migrate over to an L2 mode. Like that's just at the top of my head. That's 8 L2s doing the exact same thing. We don't need that. We don't need that.
That's fair. What about gaming L2s?
We had this debate the other day, and it was like, competition is obviously net good, but like this is just endless competition for the sake of milking the valuation premium that you get with these things. Like L2s are still launching it. They're still launching at hundreds of millions of dollars. And like, I guess you could make the argument like, well, if they win the sector, David mentioned it earlier, there's a huge TAM. Like, I don't know. It just seems it's tiresome. It is tiresome.
I want to ask one more thing, because you talked about this a bit, like the Band-Aid solution, these constant launches of infrastructure. And I kind of want to ask about Celestia being a Band-Aid solution, because as far as I understand, once full dank sharding goes into motion, like, okay, Celestia is cool, but it doesn't matter that much. Like, DA fees are going to go as low as they can. And at the end of the day, wouldn't you want to publish data on Ethereum? as opposed to Celestia, if there's like a minuscule difference. So like Eigenlayer should theoretically be fine. We can ignore the restaking thing because like EigenDA is just a part, but it can technically do everything. But with Celestia, I feel like they're latching on to sovereign rollups, and like this completely other class of rollups. And then that assumes that the modular thesis works out, which also assumes that we're gonna keep funding these rollups, these 1,000, 2,000, whatever. Like, okay, a lot of them will be app specific, fantastic, but also like I'd say 10% of them will be generalized. Is there really any value in that? And do you think like this is the general public apart from Brick, because I feel like I shouldn't bring up Celestia next to him, but do you think that the Celestia vision of like will it end in 3 years, or is there something else that they're going to be coming up with, or am I wrong completely and I'm being stupid on the podcast in public?
I mean, it's a good question. I think they are working in very similar directions. Like, it seems pretty clear to me. I think the core difference is Celestia is pretty loud about not wanting to be a settlement layer for everything. Like, they don't want native USDC being like minted on there and then using that as like building a smart contract based roll up. Like, that's not really what they're optimizing for by any means. It's not even possible and likely will never be possible. But they are building ZK accounts to improve how you like get TIA bridged across to these rollups. So specifically their asset. And so ultimately their value proposition starts to look fairly similar to Ethereum's, right? Like, you're settling these rollups on Ethereum and you're getting liquidity from Ethereum and you're posting DA to Ethereum. Well, most of that is all true where you're getting TIA off of Celestia and then you're posting your DAs to Celestia. You get some like interesting composability features when you're using the same DA layer as well. Like, play this out on a long enough time horizon, and like sovereign rollups will definitely be leveraging this. So there, like, you get something that looks similar to a melt. I don't know. Like, those are really the only two places. Well, I guess Near is competing here as well. So going back to the point of like competition for competition's sake, I mean, yeah, you can make the argument, but I think the core difference is Celestia brought an industry leading change to market at launch, which is DAS, or data availability sampling. So I don't know. I think that was like a 0 to 1. That was a stepwise function for the industry. So to me, it's hard to call it a Band-Aid solution.
Dan, do you remember? You might know off the top of your head. If you don't, I apologize for putting you on the spot. Do you remember like the block size of Ethereum post 4844?
Well, that didn't post 4844. It does not change the block size, but you get a target of 3 0.125 megabyte blobs per block. So let me quickly do the math on like what the target rate is per day, because the target rate for Celestia is about 46,000 megabytes per day. So what's that?
So I think where I was going with this, and you're right, completely messed that up. Not block size change. My apologies there.
270 megabytes per day. So, I mean, Celestia is like, I don't know, what's 46,000 divided by 270? Yeah, 170 times bigger capacity today.
That's just initial. So
long term, when full dank sharding is live for Ethereum, I think they're gonna be able to do like 2 megabyte blocks actually on like a longer term scale.
I don't know the numbers.
I could be wrong there. It's the difference though is Celestia has a pathway and they're nowhere here yet. But the end game for Celestia is get to 1 gigabyte blocks. There's like a meaningful difference, and we're talking years out into the future, right? But there's a meaningful difference that the amount that Celestia can scale, even in, from my understanding, what Ethereum's end state is with dank sharding fully live. Now the question is obviously, do we even need that much data availability? And I don't know the answer to that. Obviously, if you think of a world of 1,000 or millions of rollups and the entire world's economic activities on chain, then yeah, I have to imagine you need that. But I don't think Celestia is a Band-Aid solution. I see it more so as like indirect competition. It is a better tech stack for that specific service offering that it is doing, that is giving its rollups or its clients, which is data availability. Obviously, EigenLayer as well. EigenDA is to me, kind of a Band-Aid solution because it is trying to attach itself to Ethereum as like a sidecar DA solution, whereas I think Celestia is completely trying to be its own stand-up like platform.
I don't know, maybe 6 years ago or 5 years ago, you could have said that is Solana a band-aid solution for Ethereum? Because Ethereum will get the end state will be this and this and this, and everything will work so well. You know what I mean? And then, like even right now, because Ethereum has had kind of a first mover advantage within the smart contract world, like it's still balling out on that fact. Like you have the devs there, you have the liquidity there. I think it's fair to say that like Celestia could maybe achieve a similar position, especially if DIA gets more adoption, because then I feel like it's not as easy as just like kind of changing your DA provider.
Yeah, I guess you're right. Maybe I am being a bit of an old head in this scenario. Before we move on to more questions, let's have a quick word from Angle Protocol, thanks to our fantastic sponsor, LayerZero. All right, guys, for this week's LayerZero segment, I'm joined by Pablo, co-founder of Angle Protocol. Thanks so much for joining us, Pablo.
Hey, thanks so much for the invite. It's a pleasure to be here.
Just to kick us off, do you want to give a description of what Angle is and how it fits into the current stablecoin space?
Sure. At Angle, we are a decentralized stablecoin protocol behind two stablecoins, a Euro stablecoin and a USD stablecoin. We make sure that our stablecoins, we are building solutions so that our stablecoins are yield bearing and that there is no opportunity cost for holding them with respect to accessing to the market's risk-free yield. And so on our USD stablecoin, we have a saving solution that tries to offer the best of very low risk DeFi and TradFi yields in a passive way. We have put a lot of emphasis on like resilience, and our systems were built after the USDC depeg. Like they come with lots of fallbacks, automatic scenarios to ensure that as a USDA holder, you have more guarantees with respect to what would happen in a black swan event with respect to just like holding if you compare it to any other stablecoin out there. We are like crushing in a sense, and we place a lot of emphasis on like providing an easy access to our stablecoin across a lot of different chains with no fees, no slippage, and super easily.
Perfect. And how does LayerZero fit into Angle?
LayerZero is key in achieving the vision that we want to establish and to push for with Angle. Our vision is that there shouldn't be any opportunity cost. Like you shouldn't be the product when holding a stablecoin. And this is the case, whether you are holding USDC or USDT on Ethereum, on Arbitrum, or on any other chain. LayerZero is for us the solution that enables us to connect all Angle deployments across more than like 10 different chains and unifies everything into a single liquidity hub. So LayerZero for us not only makes it easy to go from one chain to another, but it also ensures that liquidity is not fragmented and that anyone, wherever the chain where they're from, they can easily get access to like the super liquid yield products we are developing with Angle. So I'd say that LayerZero is the facilitator in the vision we are developing. We ensure that our job is to make sure that we optimize for the balance sheet of the protocol under solvency and liquidity constraints. And LayerZero is the key element that guarantees that all the protocol like deployments are consistent with one another.
Perfect. And lastly, I'd love to hear more about what's on your roadmap over the next 6 to 12 months.
The roadmap for us is always like what dictates the roadmap is always determined by how are we going to make the life of our users easier, and how are we going to facilitate the life of users in DeFi. How are we going to build the tools so people start using finance on blockchains because it's a more efficient standard than using finance than doing finance as it is today. The key product we have is our saving solution, and we have several iterations going live that are going to further enable the accessibility of our yield products for anyone coming with USDC on any chain to be able to get in, get out at any time with no fees, start earning a yield, super transparent yield, and on many chains thanks to LayerZero. So this is key in our roadmap. And then it's something I've not really mentioned here. We are building a lot of tools and a lot of tooling and systems to make on-chain forex a reality. There are approximately 10 trillion worth of dollars traded every day on the forex markets. Almost none of this takes place on chain, and everyone sees the promise of using blockchains for cross-border payments, for remittances. But this is really barely the case, because you don't have like liquid markets between USD stablecoins, Euro stablecoins, or you could factor in other currencies in this. And this is what we are going to release in the next 6 to 12 months with Angle. The possibility for this to take place at scale.
That's very exciting. Thank you so much for hopping on, Pablo.
Thank you so much. It was a pleasure.
All right, we are back. Okay, we talked about apps, we talked about infra. Let's talk a bit about gaming. I've been working on another gaming report. Very fun stuff to write about something that 99% of the industry doesn't believe in. But Dan, you mentioned this a little bit earlier, Magic Blocks and A16Z promoting fully on-chain gaming. I kind of want to just talk about the most basic idea behind like crypto gaming, which is, do you think it works or is necessary, or do you not think it works and is not necessary?
Could you maybe expand on that idea a bit? Because I think that there's kind of levels to this. Like, are you meaning that everything connected to the game is basically on chain, or are you happy if like kind of
however far you want to take it? Because I think that's been the main issue, is that it's like two camps, three camps: people who don't believe in crypto gaming at all. I'd say the majority of people in cryptos in that camp. People who believe that only like certain assets should be on game, and I think this is like probably the most obvious thesis, is like, oh, like I want to be able to trade my skins on chain, or like I want to be able to like use the coins that I earn in a game on chain. And the third camp, the most intense camp, but I think the most fun camp, is let's put everything on chain and build out random stuff to make sure that we can put everything on chain, and like autonomous worlds, AI agents playing silly stuff on chain, moving from like point A to point B is an interaction on chain. And I mean, you can take it however you want, like whatever you want to talk about, you can talk about, really.
I'll just briefly say something. Like, I think as someone that's a hyper bearish on chain gaming, historically, on every single time this conversations come up on like this podcast or even private conversations, to me, the only thing that's like a hurdle for me to get to believe in this is like, I need a narrative. Like, what is the cohesive narrative for on chain gaming? DeFi has a cohesive narrative, right? It's like a permissionless financial ecosystem that anyone can tap into. DePIN has like a narrative. It's like permissionless capital formation to bootstrap capital intensive networks, permissionless labor participation, two like the big things crypto is good at. I have yet to see someone come to me with like a really good cohesive narrative for why on-chain gaming makes sense and what is like the net benefit that these games going on chain do compared to like traditional gaming today. Like trading skins to me is not, that can't be it. There needs to be something else to get the next wave of game developers and the next wave of gamers on chain. Because I don't think that's like the secret sauce there. That's my one gripe, I think, personally.
But that would be huge though, because like a lot of these, like the most popular games ever, are pretty much based on like the developer making money there is based on the fact that skins are in big demand. And like the problem for me there is that most kind of places that you can bring up where blockchains could like give the player a better experience kind of hurts the developer from like a financial perspective. So for example, like creating an in-game economy on chain where the player can kind of move assets outside of the game and sell assets outside of the game's marketplace just means that like the game's marketplace isn't making as much money because you can't always take the cut from like the sold items or the sold skins. The same kind of goes for like being able to transfer skins between games. Like that just means that like the game developer can't sell as much stuff when they create the next game. Or for example, when some people have mentioned that you could like transfer your levels, for example, as well, or like some kind of an experience. I don't know, if you look at some games that basically just like let you pay to win, that would be a huge loss for them. Like their whole business kind of idea or business model would break down. So that's where I struggle to, see how you're going to get these big AAA games to move on chain. I think for indie game developers, it might make the most sense, because then, like, I think it's not that profitable from the first place unless your game absolutely blows up. So you could basically, collaborate with other indie game developers and kind of create a ecosystem through that and create an experience that a player off chain couldn't get, because everything is siloed there.
Yeah.
I mean, I agree with your points, Brick. The one thing that I think the whole marketplace idea makes a lot of sense is bringing marketplaces on chain. I think it inherently increases access to these things, and thus should increase the liquidity there. And more liquidity, more trading, fairer prices. So I do think that is an interesting aspect to be bringing these in-game economies or in-game marketplaces on chain. That said, like the whole, wear my Call of Duty skin in Fortnite, like that is never. I play video games. I don't. That doesn't fire me up to go be an on-chain gamer by any means. And then I showed that while David was talking. I showed the Magic Box announcement video. It says it's all on chain. I really don't get how that's possible. And I haven't had the opportunity. This was literally 30 minutes ago to do the DD there, but like every square you step in like an MMORPG cannot be an on-chain move like that. First of all, that's a non-trivial cost to that. If the median transaction fee on Solana, for example, which is where Magic Blocks is building, is 0.2 of a cent. So every 10 steps you take, if they're all one transaction, every 10 steps you take would cost you 2 cents, 100 steps, 20 cents, and so on. And like, I don't want to pay that much to like play the game. I don't know. I'm not totally convinced that makes a ton of sense.
Well, I think that's why these gaming companies are going to have to, or gaming studios or developers are going to have to raise a lot of money to abstract all that away, and then eventually find a monetization path that like users aren't paying to like move, because that is a ridiculous concept, right? Like that has
But
to
it begs the question, like, why does that ever need to be on chain? Which,
So-
Boccaccio, I'm curious what you think there.
One thing I'll say really quick, and Boccaccio, please jump in here after this, is Hayden, who's on the research team, is bullish on chain gaming. And one thing that he said something that was interesting to me was like provably fair on chain games, which I do like the concept of. Like if the more things are on chain, the more you can prove that like your competitor doesn't have an edge in, which I know as like a gamer myself, like when I'm playing someone on Xbox Live or PlayStation Live, whatever, like I'm always like they're cheating somehow. Like if I'm losing, it's like there's no way that person's that good at Madden. Like what are they doing? Or Call of Duty or whatever. That was the only thing ever that anyone's ever said to me for on-chain gaming that sort of resonated with me, which is why I can see a world where the more on-chain aspects more aspects of the game go on-chain, like it becomes provably fair, and then you can actually ensure that people continue to play their game because nobody's cheating.
Yeah, so Hayden is, as far as I understand, he's also read this, which is by Gubsheep, who they developed Dark Forest, which is one of the like first, I think, like promising attempts at fully on-chain gaming. And yeah, I think that's one of those like big ones. It's provably fair and verifiable. And another big one is composability. But at the end of the day, I don't think that the narrative is like as clear as with DeFi, which is why I also think we just haven't gotten there yet. The one thing that's actually been making me more and more excited about on-chain games is, and I've talked to Dan about this, is that, and Brick, I feel like you kind of touched up on this as well. Like, why would a big game developer come on chain and launch a game? I don't think, like, as you said, I don't think it makes much sense for them to do so. And it's the same reason why I think we had the same conversation regarding AI like months ago. Why would like a legitimate AI company come on chain and like build decentralized AI? And at the end of the day, they won't until either there's financial incentives, the same way that like they're building subnets in BitTensor because there are financial incentives now. And I think the second thing is that the original like DeFi builders, why did they come on chain? They had strong ideals and strong principles, and they wanted to build a different system. And I think with gaming, it's slightly like you're going to always attract that sort of crowd, at least for successful gaming, is like there's some like Zai and stuff that I just don't feel like are very genuine attempts versus like other attempts which are Mud, who have Redstone, and like Argus, even though like fundamentally there isn't that much difference. They're both trying to build more efficient and like proper fully on-chain gaming. And I think it's just about motives. I feel like when you go over the work, like when you read from Gupsheep, and when you read about like Argus and Mud and their approach and like how they started developing Dark Forest and then ZK Dungeon, and how they found out that they can't develop these games because they like it's just the EVM is just not good enough, and some other like I'm there they list like a million reasons. It's just like the state issues, storage issues. It's just not particularly beneficial like towards gaming, and they decided to launch their own frameworks, which is kind of
Right.
why like long-winded way of saying I'm interested in these two protocols because they're actually like trying to build cool stuff on chain.
Yeah, I like your point there. We talked to Scott Sonardo on this show actually a while ago, and yeah, he was like, the EVM is not built to build games on top of. It just doesn't work efficiently. So it's interesting to see that. The other hard part here is like building a good game takes years, and so it's very easy for us to come up here and yap about it. But it takes a legitimate time. Even if like the solution has been discovered today, they won't like come to market for years. But counterpoint to one of your earlier points, which was like we need legitimate gaming studios to come, and they're not coming. CCP Games built EVE Online. EVE Online is arguably the largest in-game economy in like the world at any point in time. There's like famous battles that have happened in this. It's like an open world game. Famous battles that have happened, and like you can calculate like the dollar value of the ships that get destroyed in these battles, and they're like multi-day battles across the entire game servers, and they are building something called Project Awakening, funded by A16Z, and it looks pretty interesting, man. Like I don't know, and like they had a dev net not too long ago. I think there's another one coming up, and they are like actually trying to build the same game, but with some on-chain elements. It's not fully on-chain, I don't believe, which I kind of think that's what makes sense here. But they really are. They want like the marketplace to be on-chain. And then in EVE Online, they had a huge problem with. I don't know. Maybe it is. I could be wrong there. I'm not 100% positive, but they had a huge problem with like EVE Online with these like black markets popping up, and so they just want to like make the canonical marketplace where everything happens, and you get more liquidity, better prices, and more trading. And then even just like composability is right. Like people would try to like build services around the game, and then you can't because it's like their prerogative to turn those off, like classic Twitter API stories. But if they're all smart contracts, then like they're permanently open APIs, and so there you can go interact with them.
Yeah, and I'm excited for those types of games that are not like it's not Call of Duty or Fortnite, but it is like a game that I know there are like some of those games out there that people just sink 30,000 hours into. It's not like one of those games that you pick up every year like Madden and you're like, "Oh, I'm just going to play this around like 6 months and I'm done." No, it's like people like grind that game out for 10, 15 years. That's the only game that they play.
Like Hamster Combat?
Hey man, Hamster Combat is trying to change the way that we interact with consumer applications on Telegram, and I am excited for it. I'm actually not. I haven't checked it out yet.
I know we're probably coming up on time. We're almost at the hour mark, but I know all of us were kind of chatting, and additional people aren't on the pod, but chatting about Telegram games and the click to earn phenomenon. None of them are, I haven't tried all of them, but the ones I've seen are not games. They're just like me having a seizure on the couch, seeing how quickly I can like tap the screen to beat some random person.
But these exist on the App Store as well. We were debating this, David, and I was like, all right, let me see what tap to earn games are on the App Store. And like, this is a sample size of one. I did not put much effort into this, but you go read the comments on these games. I think one was called like Cookie Monster or something, and you're like
Cookies per second.
Yeah, and it has like a cookies per second stat. It's hilarious. But the comments on these things are like, this is the most addicting game ever. Like, don't download this if you have an addiction problem. Like, and of course, playing it for 8 seconds, I was like, yeah, this is fucking stupid. But I don't like tap to earn games exist. They're like a whole sector of app store markets or games. Like, I agree, they don't feel like games. They feel like chores. But, and I think Snoop Dogg had this like weed farming game a while back ago where it was the same concept. You were farming weed, and it was just a tap to earn or tap to click play game. And I don't know, maybe there's something there, but it's really hard for me to say that like, yeah, that's what's going to onboard the masses. And one of these fucking apps on Telegram tweeted out their active users stats, their active addresses stats, and they're like 1.25% of the world is playing our game. And I was like, all right, well, you're just showing off how fucking useless that metric is. 1.2% of the world is not playing your Telegram app.
Dan, you're so upset about
Say it
this.
with your
I've
chest.
never heard anybody come on the podcast and curse this much. It's a
I mean,
family-friendly show, man.
I'm sorry, but Joseph, bleep me out on the edits. I want loud, like ear-piercing beeps.
On the last podcast, no, the one before that, I mentioned that Drift is not a good product because liquidity is not good. Now, we talked about this a bit, but I kind of want to get like this out in public. Do you think that if you're a Perp DEX and you have bad liquidity, is that a product issue or is that not a product issue?
It's like saying if I use Uber and if I request an Uber and I don't get an Uber to come pick me up for about an hour, is Uber's product good or bad? The function of Uber is to be a marketplace for drivers and riders. That is literally the core offering that they're selling. Drift's core offering is creating a good trading experience. And yes, the UX is part of that. But functionally, I don't have a good trading experience if I'm paying massive amounts in fees or slippage. Liquidity, like every single DeFi protocol, liquidity is the core offering. So like, I definitely think liquidity makes or breaks a product. Every single spot DEX rips off Uniswap's front end. To me, the differentiator is the liquidity that Uniswap offers for traders compared to Sync Swap on ZK Sync or something. So just throwing random DEX out there.
Well,
so I definitely think liquidity. Yeah, I'm just saying in general, like liquidity definitely is part of, to me anyways, the product that is Drift.
Yeah, I mean, what's a product? The product is trading. How do you make good trading? Like a subset of your product relies on having liquidity. I think you can get into like a semantic debate as like, is that really product or more like go to market strategy? I mean, you could really get like a fine scoped view of what product means and like really zoom in on like how the user interacts with your thing. So like the product being the Uber app, maybe not the cars, but I think broadly, if I was building a perp DEX today, like what are the core things I would focus on? Like one of them would certainly be getting liquidity.
I mean, it's the number one thing you would focus on. No, it's like getting liquidity, making it an actually good experience to trade on it. And I agree, like it's kind of semantic. I also feel like it's the market deciding on whether your product is good or not.
I would add though, like there's more to what makes a good product than liquidity. It's just not. It's not the only thing.
Well, it's not, but it's
an important thing.
If someone forks Drift's entire mechanism and an entire front end and just has better liquidity, that is a differentiator. It is a better product for your end user.
At a certain point, no, though. Like if you both like, there's a mark in the water where you have sufficient liquidity, whatever that means. Let's just say like I can get through $100,000 trade with X amount of slippage, right? Price movement. I'm making up a number. And if you like, once you hit that, you have what you could call like sufficient liquidity, and then it doesn't matter if it gets forked and someone adds double the sufficient liquidity because it doesn't apply in most cases. Like, yes, you can get those ultra high trades through, but how often does that matter? Like, it wouldn't be the norm. So I would argue it's probably the most important thing until you hit, this arbitrary mark of sufficient liquidity. But I mean, like, the way you get in front of users, how they interact with your app, like, you can give me the most liquid DEX in the world, and the UI sucks. It's a pain in the ass to use. It's on a chain where the transactions don't go through. Like, then like, there's more pieces to product.
Brick, what do you think?
The way I was thinking about this was, I guess it could be also fair to say that you can divide the protocol kind of into two products. So you're offering like a product to the supply side and a product to the demand side. And like basically you can attract liquidity to your protocol if you like have a first mover advantage, for example. But then at least in theory, like over time, if another protocol comes in and kind of provides a better product to the supply side, it should, like, the supply should migrate over to the next protocol. So to me, I totally agree with efforts, like the way he frames it. Like, I think it's straight up like attached or how would you put it, like linked to the quality of the product, and like liquidity in itself, in my mind, kind of is the product as well. Kind of semantics, but yeah.
It's okay. That's all we do in crypto: discuss semantics and then see if it fits or not. But I think that's it. That's it for today, guys. Thank you so much for coming on, and thank you, the listener, for listening. Have a good day.
Thanks for having us on, Baco.
Thanks, Bob.